Here are your top Canadian real estate stories for the third week of July. Canadian homeowners might not get the rate cut we were hoping for in a couple of weeks. RBC says the housing market is now split. Some cities favor buyers, others still favor sellers. And co-housing and co-ops are gaining traction in Canada as a creative, community-based housing solution. Are you waiting for a rate cut to lower your mortgage? Recent inflation data might mean you'll be waiting for a while. Canada's inflation rate rose to 1.9% in June, up from May's 1.7%, according to Stats Canada. Prices increased for things like cars, furniture, clothing, and even rent and mortgage interest costs, which are now the biggest contributors to inflation. Core inflation, which excludes volatile items, remains sticky at around 3%, well above the Bank of Canada's comfort zone. Economists from BMO and Oxford Economics now believe the Bank of Canada is very unlikely to cut rates when it meets on July 30th. Instead, a rate cut, if it happens, probably won't come until September or later, as the bank wants to see more signs of inflation cooling. Why this matters: if you were planning to refinance or lock in a lower mortgage rate this summer, that plan may need to shift. Waiting for cuts now could cost you as rates remain higher for longer. Talk to your mortgage broker or banker now about potentially locking in rates or exploring flexible financing options before rates potentially climb again. Not all Canadian housing markets are the same. Here's where buyers and sellers stand. RBC's latest report highlights a clear divide. Toronto and Vancouver are currently favoring buyers, while markets in the Prairies, Quebec, and Atlantic Canada continue to favor sellers. In Toronto, rising listings have given buyers more power, with prices down around 5.5% year over year and condo prices falling fastest. Vancouver also remains buyer-friendly, with home prices down nearly 3% and inventory hitting 13-year highs. But elsewhere, including Regina, Saskatoon, Quebec City, Halifax, and Fredericton, sellers still hold the advantage thanks to tight supply and continued demand. Why this matters: if you're buying, your strategy should depend heavily on your city. In Toronto and Vancouver, you have leverage to negotiate smart. In the Prairie or Atlantic markets, sellers still control the game, so be prepared to act quickly or compete. And lastly, are you tired of waiting to buy a home? Tired of traditional home ownership options? A new model is quietly growing. Co-housing and housing co-ops are emerging as a viable and often more affordable housing solution in Canada. These models allow individuals or families to co-own, co-invest, or co-live in shared buildings or homes, often with lower costs and a greater sense of community. It's especially appealing to seniors, young families, and multi-generational households. And it also is being looked at as a profitable opportunity for forward-thinking developers. The big change: financing and zoning laws haven't quite caught up, but interest is growing. Why this matters: in a market where affordability remains out of reach for many, alternative housing models like co-ops could unlock new paths to home ownership and change how we think about home. If you enjoyed this video, show your support by hitting the like button. If you want to stay up to date with Canadian real estate news, hit the subscribe button now. And if you enjoyed this video, you're gonna love this one too.